Greg Andrick here, bringing you another Business Freedom Conversation post. So Danny Werfel, the commissioner of the IRS, held a press conference a couple of days ago, and he announced they're going to do a lot more audits. He's also talked about their progress on the $80 billion that Congress gave them 4 years ago. So I have some slides here for the info on it. So let's take a look at what this is. So IRS Audit Ahead is the theme of what he said. Now, everybody knows they got $80 billion in cash deposited in a bank account for them 4 years ago, almost 4 years, 3.5 years. So with that, they've cut back. So this last tax season that ended April 15, they have improved customer service, processing delays, and they've actually bumped their audit rates a bit. They answer more taxpayer calls during tax season. If you remember, during the 2022 tax season, it was really difficult to get a hold of them. You couldn't get their questions answered. They have beefed up enforcement. You're going to see more audits, and we're going to show you a little bit later on what that's all about. What's spurring them on is they did a plan to collect on, they used artificial intelligence to identify high-income individuals that weren't on their tax roll. And they went after them. It was, I believe, 116 people, and they collected $520 million. That's over $3 million, close to $4 million a person. So it's pretty effective, and that's kind of guiding them in what they're going to do next. So don't be a non-filer, and if you owe money, you're going to have to pay them a lot sooner, because in the past, you could owe money for years before they did anything to you. It's a stark contrast to the years of underfunding that led to the deterioration in their services. So they've had some interesting changes. We're basically going back to the 90s when Bill Clinton was president. They're saying the next 3 years, they're going to have a sharp increase in audits. So what does that mean? They won't boost the enforcement of people who earn less than $400,000. They keep saying this. This is a political thing, but I want to let you know, not this year, in the last year's State of the Union address by the president, he said this also. He said it in the last two. We're not going to go after people who make less than 400 grand. But what did the IRS do within the 3 months after the last State of the Union? They issued not one, but 3 pronouncements for food servers. Basically, in our country, food servers make less than the minimum wage because pretty much all 50 states allow the employer of a food service person to deduct tips from the minimum wage. There's a formula in almost every state. So you're not so true about not going after people under 400 grand. So the agency will focus on wealthy individuals and large corporations. Hence what I just told you about the 116 people paying $520 million. They either didn't file a return or they owed money. So next, they're going to triple the audit rates on corporations with assets of 250 million. Audit rates for big companies will be 22.6%, up from 8.8%. So they're going to go after big companies. Large partnerships. This is going to affect a lot more of you because 10 million isn't that great a number of assets in these days. Large partnerships with assets of more than 10 million will see their audit rates increase tenfold to 1%. Now that sounds kind of funny, but here's the thing that happens. It was only 1/10 of 1% for sub S and partnerships because those are considered disregarded entities. So if you have a subchapter S or a partnership, you're going to see a tenfold increase. They're going to look at your entity more because their policy in the past was to look at the individual return and work their way up to the business. Now they're going to go to the businesses and work their way down. Now, for a lot of you out there, take note of this because that's still a small rate. Only 1% are going to look at it, but they're going to do it with AI. So they're going to pick out certain criteria they're looking for to see if you're doing anything funny up at the company level before it hits your individual return. They're getting a lot smarter. Individuals with positive income of more than 10 million will see their audit rates increase 50% to 16.5% from 11%. Okay, so he's even now, Danny Werfel, Commissioner of the IRS, is now calling it the myth of the 87,000 armed IRS agents. Well, here's the deal. In 2023, in the first half, they only hired 34 new agents. In the entire year, they only hired 3,400. So they're not going to get to 87,000 probably ever. Interesting. So in the mid-90s, the IRS employed more than 100,000 people. And now they're back up to 90,000. So in 4 years, with 80 billion in the bank, they've increased the number of employees approximately 10,000. So you're not looking at a big army because it's going to be virtually impossible to do. So they plan to expand to about 102,000 over the next few years, whatever that is, probably the next election cycle. Over the 4 years, they'll have another increase. This will be approximately a 15% increase in headcount from 90,000 to 102,000. The hiring data, Danny said, should dissolve what he called the lingering myth of the supersized IRS. So there you have it. There's going to be certain things that are going to get more audits. The reality is they're going to have about 15% more people to look at you. That they're going to look at what you're doing up at your business, make sure you're categorizing everything right, making sure you're not leaving anything up there that you should be passing down to yourself. That's the real risk you have. Is it a really large risk? Not so much, but because they're only going to increase that by 10 times what they're doing now, but it's only a 1% chance that they're going to look at your entity. But remember, just like the 520 million they collected from the 116 high filers, they're going to use artificial intelligence to zero in on certain things they're concerned that you're doing. You're not going to get away with them anymore. So you need to straighten up what you're doing, fly right, and make sure you have a good tax lawyer. So I have Keith Cothrell as one of my showcase pages. You need a tax lawyer, because what happens when you have a tax lawyer? The pace drops to a snail pace and will take 3 to 4 years to complete whatever they're doing to you. This is Greg Andruck, Business Freedom Conversation host. I'll catch you on the next one.